Within the last couple years of me trading, I've been able to profit over $150,000 in verified payouts and consistently make anywhere from $10,000 to $20,000 a month trade. So if you're a struggling or new trader, I'm going to give you guys the exact framework that I follow on a consistent day-by-day basis, that I only trade for 1 or 2 hours a day, that's able to make me over 6 figures a year, as well as this is the same framework that I teach my students, as well as trade live with them every single morning to helping them cross their first $10,000. So if you're a beginner or struggling trader, make sure you guys take notes throughout this entire video and watch until the end to get the most value. And before we begin, make sure you guys click that like button to support the channel. Now let's get into the video. Breaking this exact framework down, I'm gonna show you guys a real trade example on how we were able to cash the longs this morning, making a little over $1,000. So guys, my Tradeify dashboard, we can see here that today for June 18th made a little over $1,000. Yesterday we made $1,700. And then the day before that, we only made about, close to $60. And as we can see, for the month of June, I've been able to profit over $15,000, as well as having a risk reward of about 3.24 with a 41% win rate. As well as this morning, my brother Spec Trades caught the exact same setup on the NASDAQ, trading live with the team, which was able to make a little over $1,300. So if you guys get value from this video and you guys want access to 100+ hours worth of trading education, courses, a personalized journal to help you when it comes to technical analysis, psychology, risk management, as well as additional things like weekly calls, one-on-one help, things like that to help you become a much better trader and helping you make your first $10,000. Make sure you guys click the first thing in the description and become a student and trade live with us every single day. The goal is to trade live every day, as well as educate every day, help every single one of our students reach their first payout or make their first $10,000 trading. So if that sounds like you, click the first in the description and become a student. Keep this very, very simple. The 3 time frames that we're going to utilize today is the 1 hour time frame, the 15 minutes time frame, as well as the 5 minutes time frame. On the 1 hour time frames, we want to create our daily buys. And when it comes to day buys, you want to pay attention to these 3 things. Where have we been? Where are we currently at? And where do you anticipate price to go next? Right? And we can use the previous day's data or previous session data to give us an analysis for what price can do next, right? And let me break that down. So we can see here that we have the week outlined. We have Monday's price action, Tuesday's price action, they come in today, Wednesday's price action, right? And to a lot of people, these charts may look a little confusing or like a different language, but I'm about to break it down to you guys in a way that's very, very simple to understand. So 8 p.m. to 12 a.m. EST is the Asia session, and then 2 to 5 a.m. EST, that's the London session. So these are the prior sessions, and we can utilize this information to see what has the market done. So when we come into the New York session, it gives us a better idea for where we anticipate the New York session to go, right? Understand that the market can do 1 or 2 things. It can either go higher or it can either go lower. So as traders, you only want to take the highest probability trades that makes the most sense for one of the other directions. See here that the Asia session saw this gap to the upside, and then coming into the London session here, we're seeing this drop lower. And within this drop lower, we can identify this level of support. This is called our fair value gap, right? It's a separation between this first candle's high to this third candle's low. So from this high to the low, price creates an imbalance. This basically means that price created an expansion within the markets that left this area inefficient. So as the market is bullish, price is going to come back into this inefficient level to rebalance it and make it now efficient to then go higher. Give this like a gap. Price creates a gap here, so for the market to go higher, it has to come lower to close in the gap. And if we can see price find support there, then it can go higher. We're going to take note of that fair value gap right there, as well as we can take note of this original high right here and mark it out as our London session high. Make sure to take note of that. As well as we are within this last down close candle, this is referred to as our bullish order block, right? This is the last down close candle before we saw this strong push to the upside. When we see a strong push to the upside like this, most likely this was created by smart money. And let's say someone right here entered the markets for about 3 million contracts. Only 2 million of those contracts were then filled. There's an additional 1 million contracts within this level. So as price comes back down into this level, those remaining 1 million contracts get filled to then continue the market back higher. This is why it's referred to as an order block. So when marking out high probability order blocks, you want to mark them out in levels to where there was a strong reaction away from it. So we can see price came lower to take out this original low right there. And then after taking out that original low, we see the strong reaction away from it. So as price comes back within this last down close candle, this is deemed as a support level, to where if we can see price come down into this level and it hold and not break back below it, we don't want to see price break back below it, but if it can come down here and it can hold, then this is a really good support level to reaching back above these high points. Where have we been? We've seen the market go lower and it created this order block. Now where are we currently at? We're currently inside of this bullish fair value gap as well as this bullish order block range. And where could we anticipate price to go next? Well, we can create an if-then scenario. If price comes down into this fair value gap and order block level and it can hold as a level of support, then we could see higher prices away from this level. Then we can frame along to reaching back above these London session highs. But if price were to break back below this level and it does not hold as a level of support, then we could see a retest of this same level to reaching back below these lows, right? When it comes to daily buys, it's not always about predicting the markets, but it's creating multiple scenarios that could potentially happen. And then as the market opens up, you want to pay attention. So if we could see price hold within this level and it break away from it, then that could classify that this was a strong level of support that was held, and then we can take the retest reaching back over these highs. But if price breaks back below it, then that means this support did not hold and it could break even lower. So these are the two scenarios that I'm currently looking for. So on the 1 hour time frames, we're able to identify our overall structure. We marked out this level of support, and now we've just created our daily buys. Now that we have that out of the way, now we can go down to the lower time frames to frame our perfect execution. On the 15 minutes time frame here, let's keep it pretty simple. Then 9:30 is the stock market exchange open for the S&P 500. So before 9:30, I'm just creating my buys and I start trading after 9:30 opens. So before 9:30, we can see here that price came down within that fair value gap order block level, and then we can see this bounce to the upside, and now we can see that price is currently looking like it's in a retest coming back to the same level. So as 9:30 opens up here, I want to see as price comes back down here, is it going to find support to break away from this level to maybe catch a retest reaching back above these high points. So I'm going to let this play out here. You can see here 9:30 just about opens up, and we can see that price came back lower and it creates like a double bottom with this original low. Within this same level, we can look at a correlated market, which is the NASDAQ. So the NASDAQ is very much correlated to the S&P 500, and we can use it as a confluence. Basically, confluence means multiple things stacked on top of each other to give us an idea for whether price is going to go higher or whether price is going to go lower. So the more confluences that you have, or the more ideas that you have for why price should go higher, the higher the probability it is. So a confluence that we used with the NASDAQ is called the SMT divergence. So we could see here that we have the low here on the NASDAQ, as well as we have the same low there on the S&P. On the NASDAQ, price came lower and it took out that original low. But on the S&P 500, it didn't necessarily take out that low level. This is called a SMT divergence, when one market takes out a low while the other market doesn't. This is a good confluence that we can use to give us an idea that price could potentially be bullish. So as we get this rejection wick, which we can see here that price gives this long wick inside of the marketplace, as we get that rejection wick, this gives us a good idea that price could potentially find support to reaching back above higher prices. So I'm gonna let this play out here. After that, we can see we have a strong push to the upside right there, giving a bullish engulfing candlestick, right? Strong push to the upside after creating that SMT divergence. Three things have played out here. We're inside of this level of support, which is that 1 hour fair value gap. Price created this SMT divergence, which is a good confluence for higher prices. And then we see this strong momentum in the opposing direction, meaning that once price tapped into this level, gave that SMT, price is immediately running away from it, and we could anticipate higher prices. The other scenario that we were talking about was if price broke through this level, we would take the short. That didn't happen. So that means overwhelmingly, my narrative is higher prices. So at this point, I was anticipating price to pull back to frame an entry to take my longs to reaching back above higher prices. You can take note of these two last down close candles right here. right? These two last stop close candles is a bullish order block right there, right? We had this strong displacement in the opposing direction after price tapped into this level of support. These two last stop close candles right here creates my bullish order block. So in this case scenario, I framed my long setup at the high of this last stop close candle, and I put my stop loss back below these lows. Maybe asking, why do I have such a wide stop loss? My first trade is always with less risk but a bigger stop size. Too many people focus on the take profits when you should actually be focusing on the stop loss. Only put your stop loss in areas in price action where you feel the safest. Currently, I feel the safest with my stop loss back below these lows, because price could easily come right here, it could easily come right here, and it could easily come right here before it's taking off. So you make sure you don't want to be in a position to where you have a too tight enough stop loss and price takes you out quickly before going in your favor. Because I know that's a struggle a lot of beginner traders face. I utilize this risk management system where I use less risk on my first trade but a bigger stop size, and as price goes into my favor, then I would scale into position and adjust my stop size. See here on the 10 a.m. opened, we came lower, it tagged me in, and we can see price immediately ran away from me. So at this point, I was able to scale into my position. Once I seen price tapped into that order block and then run away, I was able to scale in, and my new stop size was really just back below this low. And I was reaching back above these higher prices for a 2 to 1 R for about 20 points. And as we can see here, price eventually went all the way back up there, took me out at take profit before seeing this reversal, as well as my take profit was at a level to where we did have consolidation. So we can identify this last up close candle right here, last up close candle before we saw this massive drop to the downside. So obviously this last up close candle before this massive drop to the downside, what is that called? That's called an order block. So as price came back up into that order block and it started consolidating here, I was already up 20 points and I took my profits right there. And this ended up being the exact high of day. We had FOMC during the afternoon, and this is where the market is currently at, sold at the exact high of day. These are the exact executions, which made me a little over $1,000 on the day, and I'm up well over $15,000 on the month, and I've only traded about 9 days this month. So let's just say it's been a very good month. We're only halfway through the year. I am live trading every single day with my students, as well as educating and helping my students every single day within Spark, helping them cross their first payouts or making their first $10,000 trading. So right now, if you're a beginner or if you're a struggling trader and you enjoy my content and you want me to help you to making your first $10,000 or reaching your first payout, make sure you guys click the first in the description and join the Spark trading family. We're live trading, educating every single day, as well as we have over 100+ hours worth of additional lessons, classes, and everything like that to helping you become a much more consistent, profitable trader. So that's gonna be it for a video. I hope you guys got a lot of value from this video. Make sure you guys click that like button, subscribe if you're new to my channel, and comment what you guys want to see next. I'm your mentor, Arkhamtrades. Be safe.